Okay, new U.S. home prices hit record highs despite sales hovering near 14-month record lows. We got the existing home sale report going on right now. We've got tons of forbearance exits starting to happen right now as well. And I'm seeing a lot more foreclosure activity starting to occur in the real estate market. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate on this 25th of August, 2021. Hope you're doing well. Still finishing up some of my technical issues. So I'm going back and forth with a couple monitors here. So just bear with me. Hopefully next video will be all squared away. Want to really get into it. But first of all, if you're looking to get a good price property, you need to look for distressed properties. And where do you find that? You go to gethousingdata.com. That's gethousingdata.com. That's my partnership with Foreclosure.com, who is the nation's leading provider of distressed property listings. So there you go. Want to find short sales, you want to find foreclosure auctions, REOs, probates, other distressed property, gethousingdata.com, and you can see what's happening in your neck of the woods, your own backyard, your own home market. So there you go. So what's the scoop today? Well, we're going to get into some of this now. So U.S. new home prices hit record high. Sales hover near 14-month lows. So basically, I guess you could say we had a surprise rise in existing home sales, which we'll get to in a second, and home buyer sentiment still crashing. Analysts expected a big rebound in new home sales also in July after 3 straight months of declines. And they did rise in July, but only 1.0 month-to-month rate. The big drop in June was also revised as well, too, downwards. So basically, we're seeing less new homes being sold, but their prices are going up, for a various number of reasons, I guess. So therefore, price high, sales low. Maybe that's a reflection of what's happening in the marketplace right now. Why? Because home buyer sentiment is terrible. All right. So new home sales are hovering at their lowest since April as median new home prices reach a record high. So there's no surprise there. So I guess people are essentially being priced out. So we see exactly that. So funny how the red line is the decrease. So you can see it's the sales are sinking, yet the green line is the median price point. So funny enough, how we see a big divergence in that, I guess, that statistic. So comes no surprise. Basically, there's this. The U.S. housing market data has serially disappointed this year. U.S. home builder stocks have soared back to record highs. So it's funny how everything kind of works, right? You got less home sales, but we got better pricing, or home prices are going higher in the new home sales front, and therefore their stocks are performing better. So I guess it depends on what you're looking at. So ultimately, this is more of a Wall Street play, as they're saying here, but just something to keep in mind. One thing too, if you're not already a subscriber, if you could please help my channel grow and smash that subscribe button, I really appreciate that. And if you are a subscriber, or you think you're a subscriber, could you please double check and subscribe again? Because obviously I keep saying that I keep losing subscribers more than I'm gaining for various reasons. So thank you once again, guys, for supporting the channel and give me the, I guess you say, the confidence I can pull all this data and talk about it in some meaningful terms to talk about what's happening in our housing market. So existing home sales came out as well this week from NAR, National Association of Realtors. So what's the key we're looking at here? Well, home sales climbed 2% in July. So a little bit more homes sold, which are interesting. So existing home sales rose 2% on a seasonally adjusted annual rate from June to July. Okay, with no sales declines in any regions. The inventory of unsold homes increased slightly, 7.32%, which is great. And the median existing home price rose at a year-over-year pace of 17.8%. So, of course, we're still seeing some pretty substantial growth. And we see inventory beginning to tick up, which will lessen the intensity of multiple offers. Much of the home sale growth is still occurring in the upper end markets, and we're going to talk about that as well too, while the mid to lower tier areas aren't seeing as much growth because there are still too few starter homes available. So clearly, first-time home buyers, starter homes are, there's nothing there, and those are being priced out of the marketplace. So that's what we're having problems on in the market, and the higher end is sort of picking up the slack there. So that's what goes on. So NAR produces their summary of July 2021. We'll get into it right now. I guess a total existing home sales on a seasonally adjusted annual rate. So we're just under 6 million. For the year seasonally adjusted. So that's about the same. Nothing's changed here. Obviously, the median price point has pretty much plateaued. We're at $359.9. So median price is right in the middle. Not the average, it's the median, but it's what these guys use to talk about. So we can see maybe a slight decline from the previous month. But ultimately, we're still at a high level, and we can see how it's increased over the past year and really since 2021, we've seen a significant increase from what really is around the 300 level to over mid threes right now. So that should be concerning to people. Existing home sale median price percent year-over-year change. So we actually had a little bit of a slowdown in the median price increase year-over-year. So we saw that in May and June we hit over 20% on the year-over-year increases for the median price, and we only did 17.8%. So still double digits, getting close to 20% again. So nothing to cry home about, but just a slight decline there. Existing home sales, so I guess percent change year-over-year. So clearly everybody was buying homes in sort of April, May, and June. July, we saw a little bit of a slowdown. All right, so existing home sales year-over-year, and that's reflecting from this time last year or July of last year when we sort of had COVID going. So I know that the bigger jumps to the 30 and 44% were probably because not much is happening due to COVID and the lack of sales. So that's why we saw such a big jump in 2021. But see, we only have a minimal jump from July to where we are now. So I think that's when the market will start to normalize a little bit. So there you go. The Realtor Confidence Index survey will obviously see first-time home buyers drop a little bit. Sales to investors remain solid. Cash sales were up. Distressed sales, basically 1-to-1. I mean, 1% of the market is distressed sales, which I think you need to look at that, because what are distressed sales? Distressed sales are made up of really two components. They're made up of foreclosed bank-owned / REO property that's put out in the MLS and sold. That's bank-owned property in the free market, and also it's made up of short sales. So we see that last year in the pandemic, everything slowed down because no distress was moving. So therefore, people are getting foreclosed on. Foreclosure processes were being halted, etc. The moratoriums are in place, so that slowed down. And now we still see that we haven't caught up yet. Obviously, as of July 31st, we had some big changes with respect to the foreclosure moratorium being lifted, and things are restarting now. So we'll hopefully see distressed sales become a larger part of the existing home sales on a monthly basis. But realize that, again, 1% of the entire marketplace is distressed sales, which means 0.5% are short sales, half are REOs, which goes to show you that's where the opportunity lies on a going forward basis. So existing home sales by region, clearly the South always has the most, 44%, Midwest 23%, Northeast 12%, and the West 21%. There you go. All right, this is interesting. So we do see a slight increase in supply from the national supply as well as single family and condo co-ops. So it's not huge, but we're seeing like really a tenth of a month. I think we're at something like 2.4, 2.5 or 2.6 seasonally adjusted right now. So slowly we're getting more, and that's been the report of a lot of news, news wires and sort of websites and a couple other real estate blogs, that we're starting to see a little bit more supply hit the marketplace, which should help us in the long run. Now, sales by price range. So when we talk about how median price points are increasing, well, it's because we're now seeing, look at the 500 to 750K, 17%, 750 to 1 million, 6%, the 1 million and above, 6%. So we're seeing the higher end price tiers have more sales right now. So is that a function of availability? Is it a function of low interest rates, putting people into higher brackets so they can actually, or higher price brackets to purchase? Probably a combination of a lot of different things out there, but now we're seeing the fact, so we're just seeing the increase because of volume and because of opportunity. So there you go. So this is key though. This slide makes sense because you can see that in the 0 to 100K range, there's less sales, 30% than last year. The 100 to 250K range, almost 28% less than last year. The 250 to 500K, which is kind of like your typical average house price across the board here, actually minus 1.1% compared to last year. And then we jump up big time, 32%, 53%, 59% for the next segments, the 500 to 750K, above 750 to 1 million, and 1 million above. So really, we see that the larger, more expensive homes are driving the market now. As I said, fueled probably by low interest rates, fueled by a lack of choice or lack of inventory, and maybe more people are shifting. People with more expensive homes, maybe in the West Coast and the Northeast, are selling, and they're going to relocate to their location. So more of those properties are actually on the marketplace. So there's probably good deals out there. So obviously, we see this $1 million listing spike, sparks jump in U.S. existing home sales in July. So ultimately, at the bottom there from, I guess you could say, Lawrence Yun, NAR's chief economist, basically says we see inventory beginning to tick up, which will lessen the intensity of multiple offers. With less multiple offers, that means price points kind of plateau and alleviate the pressure, which is good. Much of the home sales growth is still occurring in the upper end markets, while the mid to lower tier areas aren't seeing as much growth because there are still too few starter homes available. So really, that's the problem. You have first-time home buyers and investors all vying for the same, I'll call it, affordable housing market segment. You're going to have situations, you're going to have problems. You're going to have price competition and a lack of homes. So that's why we just see less and less sales. Also, as we know, with builders, the median home price for new homes is going up. So those aren't starter homes anymore. Those are almost like mid-tier homes. So you're not having very many builder homes in that 200 to 250 range anymore. There really is. I don't know anywhere in my area where I see prices like that, or unless it's very small or stripped down. So there you go. And again, maybe townhouses and stuff, but not the single family homes. Just to take a look at the month supply here, so we can see that, we really, in February of this year, we're probably at our lowest at 2.0 months supply. We are now up to 2.5, I guess you could say seasonally adjusted at 2.5 months. What this actually means, so supply of homes basically indicates that if no new product or inventory came on the marketplace from now going forward, it would take roughly 2.5 months for, at the sales pace we're currently on, for all those homes to disappear and be off the market. So we're looking at 2.5 months of supply. Analysts, economists, real estate professionals always sort of say that 6 months worth of supply is what we would call a balanced market. So that's where we're at in that. So supply slowly inching up. And once the fall hits, we're going to see more supply because we're really leaving, I'll call the summer selling season. Different parts of the country, say in the South, our school has already started. So, our elementary school, middle school, and high school started a couple of weeks ago. And I know this week our university started back up too. So, that's where things are going. Different parts of the country, like the Northeast and Midwest, sometimes school starts after Labor Day. So, it just depends on where you are, where you'll see some slowdown. Slowdown typically means people have already bought and sold, and they're closing by the end of the month, or they've already closed and they've moved so their kids can start school, things like that. So this is typically what happens. So even, Realtor Confidence Index survey for July 2021 says what? Demand is cooling in a moderately strong market. So we're seeing a pullback right now. So homes typically sold within 17 days. Was 22 from a year ago. The buyer traffic index decreased further from 71 index to 64 in July. Seller traffic remains below 50, which is a weak compared to level more than a year ago. On average, homes sold had more than 4 offers, which remains unchanged from last month's survey. So, but the point though is that everyone's talking about the fact that guess what? It's slowing down, it's cooling, which is good for obviously on the buy side of things right here. Well, here's an example of what they call the buyer traffic index. It's like a heat map. So obviously, the kind of orangey red, the darker color is very strong. And obviously the lighter it goes is a moderately strong and a weaker market. Well, this is actually a snapshot from April of this year. So we saw a lot of stuff happening in April. We saw, big price increases, a lot of activity happening as far as year-over-year sales, and we see the buyer traffic index is up. If we take a look at the most recent buyer traffic index, hey, guess what? A lot of that red has dropped. Where are we seeing the red? We're seeing in Montana, Oklahoma, West Virginia, Iowa, and South Dakota. Don't know why, just maybe that's just the situation in those locations. But the rest of the country, we've seen it go from dark red or the darker color to moderately strong. And then we see a little bit of the stable now. So things are cooling down. This is just really the buyer traffic index. So these are buyers that are out looking at property, showings, activity, etc. So that's something to think about. And also, we're starting to see in different blogs and different real estate websites more commentary on what? On the fact that, sellers are not getting maybe as what they thought they would get, or things are starting to change a little bit, which is good for the buy side, right? Sellers dropping their asking price can ring alarm bells. So, right now, we've always been in a situation because of COVID, because of low interest rates, because of low inventory, we've seen the skyrocket of pricing. We've seen it very difficult and everything sort of happening at once. Well, now, as time goes on, as I said, the season is kind of ending now. We're kind of normalizing. We're going back into what I would call more of a normal real estate market when the summer selling season is over. So I expect that we're going to see price decreases for homes that haven't sold once the fall starts or once September starts. And we're also going to see more distressed property come into the market as things kind of unwind. And what do I mean unwind? Well, as I said, the shift has started. As of July 31st, the shift had started. So what was so significant about July 31st? Well, there's sort of three things that I sort of put into buckets, right? So the first thing is we have the CDC eviction moratorium. That's as I say on the left here, right? So is that really affecting the existing home sale market? Not really. Why? Because that really deals with tenants and landlords. It's rental issue. So basically, the CDC eviction moratorium is over. The Biden administration sort of worked with the CDC to create a new moratorium, which is being challenged all over the country, and it depends on whether another moratorium for 60 days where you can't evict. It was a Supreme Court ruling back a few months ago said it's not enforceable. I guess it depends on what local states or state level or local judges are going to do at the county level. All right. So again, that's not really affecting the sales side of things, but it's still something to talk about. Now we have the foreclosure. So the foreclosure moratorium basically is lifted. So homes that were in process or had sale dates canceled will start back up. Homes were in the foreclosure process will start back up as well too, and then new filings will start as well. So that's going to pick up as the months go on. I've already seen activity of that I know it's increasing, at least in my local market. You may want to check yours. And then the third thing is the forbearances. And forbearances are starting to unwind now. And that was the discussion of our last video. And I'm going to reemphasize that. If we take a look at this chart here, this is a little bit of extrapolation, but you can see that in August, the projected expirations of forbearance programs is 108,000. That's across the country. So remember, going to Black Knight Financial statistical information, the best we can get, the best we can do at this point in time, they're saying we have 1.86 or 886 million people still in forbearance programs. And the majority of those are actually going to, from now to the end of the year, will be leaving their forbearance program. So what that means is that they've done their 12 months and had their extensions, etc. So we have 108,000 projected expirations happening in August. September, we have almost 452,000. October, 286,000. November, 185,000, and December, 95,000. Now, these numbers I do believe are underrepresented. They are, estimates based on extrapolations, based on samplings, etc. So, like anything, things are typically worse than what they really are, especially with who's providing this information here. Again, not knocking them, but just knowing that's what typically happens. So, this will start to affect the marketplace, and what do I mean by that is these will become opportunities for buy because all these homeowners, they don't just get a forbearance, they don't just get loan mods or new programs or whatever. They actually have to go to their lender and discuss this. So they got to call in and they actually have to provide information. They have to be reviewed, and then both parties have to agree on whether they can help each other or whatever the offer is from the lender, they can live with it. So this becomes a highly, we'll call it, high touch point type of activity where I know based on the last housing crisis, a lot of people may just get frustrated and say, the hell with it. Either I'm going to sell at a discount or I'm going to sell or I'm just going to let it go. So that's where we're going to see a lot of activity starting as the months go on. So, be prepared for that. That's where our opportunity is to buy cheaper properties because of how this is going to play out. All right, so everyone's talking about this now. What do I mean by that is, obviously large investors are ready and waiting to pounce. They want to jump on the foreclosures, buy at the auction, buy the third-party auction sites if they're available. So they're ready for this, right? Other investors, big investors are inquiring, they're positioning, they're looking to see how they're going to mess with the marketplace as well, too. They're going to buy at the auction. They're also looking at alternative ways, working short sales and things like that. Primary home buyers buy in. Clearly, a lot of you out there want primary homes. I understand that you don't want to pay a premium for it. So now the opportunity will start to present itself as time goes on. Other real estate agents, same thing. They're going, we need to prepare for this now. If you're an agent that you became an agent the past 5 or 6 years, chances are you've never done a short sale. Why? Because you've never had to. You don't have the experience. And listen, it's not as easy as it seems. There's some tricks to the trade in order to make it, the process work better for you and your seller. So also the info market for the real estate, investment side of things is heating up with respect to, distressed properties, foreclosures, doing short sales, the whole bit. I see that happening on a day-to-day basis. It's just like the last housing crisis. So what we're experiencing right now just happened the same way in the last housing crisis. There'll be some nuances and changes how it'll sort of be implemented, but all the stuff that was going on is kind of going on now. This could be the last time we see this because I really truly believe that once this next 2 to 3, 4 years is over, if there's anything that happens in the future with housing prices, there'll be more mechanisms to control this, and they'll have other things built in, so we won't have this opportunity that's coming to us. That's why I'm saying, really, this is the time, guys. So in other words, if you're thinking that in 6 months the market's going to crash and your real estate agent's going to bring you all these great priced properties on a silver platter, you are going to be sadly mistaken and very disappointed. So you got to start taking control of this and engage. And what I'm saying to you right now is, because there's increased activity, I'm seeing it right now that you want to jump on. So it's kind of like your last chance to start to prepare for this and get involved. So please, if you've reached out to me before and haven't decided to move forward with what the stuff I'm talking about, you may want to reconsider. If you want to figure stuff out, reach out to me. I'll show you how to do this, and I've got programs and plans and the whole bit. And also, what I'm also saying right now is that the stuff I'm offering is kind of like the last chance at the price points now, because I've already got events planned for the fall, new relationships that we've put to place to move on a lot of the stuff we're doing right now. So this is kind of the last opportunity really to get in on the ground floor, because everything's going to change once we start seeing these things kind of hit the market. So it'll be interesting. So why do you want to do this? Well, I'm going to give you some examples here. So, this I'm doing a little bit of some equity examples for Florida, where I'm located. So the Lakeland Winter Haven market. Look, $59K in equity. This is the difference between the single family home median price and the short sale median price. $59K, 22% discount. The Tampa area where I'm at, $75K in equity. Look at that. The next location, want to check that out? This is the Ocala area. Ocala is a little bit north of me, about 90 minutes. It's kind of like farms and horse country. It's kind of a cool area. We're talking $84K in equity between the median price points, right? Next place, look at this. We've got what we got going on here now. Wait till the slide goes, guys. All right, Orlando, Kissimmee, Sanford. So obviously, but an hour and a bit east of me, $100K in equity. Okay, from the median price points, and a lot of people, a lot of opportunity in that location as well. So this is what's going on in Florida here. This is the difference between retail median price points and short sale median price points. You can see that's why you want to start doing these type of things. The next location I think is going to be, what was that? Was it Sarasota? Oh, Jacksonville, $151K difference in price. Now look, there's hardly any sales going on there as well too, which means no one's touching the marketplace. Thus the opportunities there. I don't know if I can drive this home and any harder than I've done in the past. Look at this, 44% discount in the Northport, Sarasota, Bradenton location, 178K in equity difference there. And the number one location really is the what? Miami, Dade, Fort Lauderdale, West Palm, MSA. Now listen, that's a significant size metro, okay? You got basically 3 counties there, Palm Beach County, Broward County, and Miami-Dade County. That is the most concentration of pre-foreclosures and foreclosure auctions anywhere in the state, and probably a lot of places across the country, all right? So you can see the difference. That the median single-family price point for June 2021 was what? It was $500,000. And when we take a look at the median price point for a short sale, it was $251,000. That is almost a just shy of a 50% discount, $248K in equity. So when I show you numbers like this, you can see how the opportunities are there. You just have to know how to get them, how to work them, how to manipulate them, how to take advantage of them essentially, and either put money in your own pocket or get yourself a way better priced property. That's the opportunity we're talking about right now. So again, this is why we do this. Things are picking up. That's why I say, do you want to know how to acquire a property that has between $59,000 and $248,000 worth of equity? It's under fair market value. I think most people would say yes. If you do say yes, reach out to me. All right, you can reach me with respect to my email. Give me all your contact information. We'll talk about how we can help each other. All right, again, the shift has started. It was July 31st. Things are opening up. It will take a bit for more volume to come on, but as I said, the point is to get it before the masses see it, before it goes on MLS, so you're controlling the deals. As I said, we can show you how to do that. All right, reach out to me, Randy at luxuryshortsales.com. Again, appreciate your time, effort, and views. Appreciate your comments and likes. Please share the video with your family and friends. If you're not a subscriber, please help the channel grow and subscribe. And with that, reach out to me, guys. I'll look forward to talking to you in a couple of days. Take care.